I've been getting absolutely lit up about Nvidia. People are reaching out like, hey, you're the Nvidia guy, Eric. What's going on with Nvidia? Is the stock a buy now or not? Is the stock going lower? In this video today, we're gonna break down that pre-announcement. They got it down significantly yesterday before earnings at the end of the month. We're gonna go through that snippet by snippet. We're gonna talk about the ramifications for each segment. We're gonna talk about the bear case and the bull case. We're gonna look at the valuation of the company, some future growth opportunities for the company, and then we're gonna look at a chart and I'm gonna tell you if I think Nvidia stock is a buy now or not. Let's get into it. All right, what's going on with Nvidia? Is the stock a buy now or not? So preliminary second quarter revenue, they reported $6.7 billion versus outlook of $8.1 billion. Ouch, that's a significant miss. In fact, 20% lowered revenue as well as gross margin guidance. They told us that these weak numbers were caused really by gaming. Second quarter revenue is expected to be approximately $6.7 billion, down 19% sequentially and up 3% from the prior year. Now, part of this, guys, we've talked about tough comps. Nvidia is going to have some really tough comps, especially when you think of the pandemic, people staying home and playing more games. You've got some pull through. If you already upgraded your equipment, you might not upgrade it right away. You also have crypto mining. We'll talk about more of that in a second, but think of those tough comps. So that's part of it. They've grown massively over the last several years. Gaming revenue was $2.04 billion, down 44% sequentially, which is a big number, down 33% from the prior year. On a positive note, data center revenue, we'll talk more about this later, was $3.81 billion. That's only up 1% sequentially, but 61% from the prior year. Now, the shortfall relative to the May revenue outlook of $8.1 billion, primarily because of gaming products, says here again, reflecting reduction in channel partner sales, likely due to macroeconomic headwinds. Could also argue probably some cryptocurrency, crypto winter issues as well, right? In addition to reducing sell-in, the company implemented pricing programs with channel partners to reflect challenging market conditions that are expected to persist in the third quarter. So what does this mean for other semiconductor companies? Like, is this going to be a problem? We've seen this from Microsoft, and we're seeing weakness now here from Nvidia. We've got earnings tonight from Unity and Roblox, so it'll be interesting to see how those guys report as well. So second quarter results are expected to include, this is important, approximately $1.32 billion of charges, primarily for inventory and related reserves based on revised expectations of future demand. Now, I've owned Nvidia since 2018. It was around $30, $35 a share, and the reason it got shellacked then was similar to this issue now. We had a crypto crash around the same time, and there was a couple things going on. We had the China trade war. We also had cryptocurrency mining. So we had a slowdown of that, as well as people were stockpiling. So we knew that tariffs were coming. A lot of countries and companies knew tariffs were coming. So they stockpiled inventory. And they would do that, of course, to avoid paying those tariffs that would come into effect at a certain date. So this isn't exactly the same, but we're seeing some similarities to 2018, and that was a buying opportunity. Now, the problem with Nvidia is it just came from $140, so it's already ran pretty hard from there. We're going to look at a chart later, but let's keep digging into this. Okay, so data center revenue, though a record, was somewhat short of expectations, impacted by supply chain disruptions. So I guess that's not surprising. Our gaming products sell-through projections declined significantly. This is Jensen Huang, the CEO of Nvidia. As we expect the macroeconomic conditions affecting sell-through to continue, we took actions with our gaming partners to adjust channel prices and inventory. So if you look at this, guys, on the left, you've got outlook. On the right, you've got preliminary results they just gave us. You can see a big miss there. $8.1 billion was the outlook on the revenue. Now they're going to report earnings at the end of the month. And if they come in even shorter, that could be really bad news. But they could actually be conservative here. Maybe they come in at $7 billion and the stock could rip then. So keep that in mind as well. But you can see here that everything pretty much was a miss except for auto. Auto was actually up 41.9%, which is really good, although it's a small part of their business. Okay, so you're wondering why? Why is this happening? Part of the reason, guys, is timing. They had 4 new GPUs come out around the end of 2020 during the pandemic, and everybody was going crazy buying these things. You could see they were jacking them up so you could actually buy them and sell them for a profit. It was absolutely out of control for quite some time. Plus, we had a crypto frenzy at the time. So there was just a lot of pull through for both gaming, people sitting at home wanting something to do, as well as everybody taking their stimulus checks and pumping it into cryptocurrency. Of course, this hardware is used, it can be used to mine cryptocurrencies, right? So COVID is one of the big catalysts. Crypto mining decrease is part of the reason why we're seeing some of this drop off. GPU demand also lowers in recessionary periods. Makes sense. You got less disposable income because inflation's high and things are rough. You lose your job, what have you. You're probably not going to go out and buy a new gaming rig. You know, you might not spend as much money if you're a crypto miner. You might buy a less expensive piece of hardware. This is also cyclical. And semiconductors, Even though they are the new oil, they do have some cyclicality. Now, some names have more resilience to this than others. In this situation, you can see where there'd be potential issues. I've been surprised of how resilient some of these companies have been when we're getting these earnings reports here over the last couple of weeks. The question is this a short-term blip that's an opportunity, or is it a reason to panic and sell the stock? This last bullet, guys, this is really big. This is huge. And I don't see many other people talking about this at all. Nvidia prepaid almost $10 billion to Taiwan Semiconductor for their 5 nanometer silicon. So if you look at, it's important to kind of look at the different segments. So gaming, revenue by market platform, you can see the preliminary results. You can see quarter over quarter, year over year on the right. So in gaming, okay, we've got down 44% quarter over quarter, down 33% year over year. Data center up 1%. For quarter over quarter, year over year, quite a bit better number, up 61%. Visualization down 20% and 4%. Automotive up 59% and 45%. That's the highlight. That's the bright spot here. And just to show this again, it's basically a miss across the board, except for auto. This is from Colette Kress, EVP and CFO of Nvidia. She says, the significant charges incurred in the quarter reflect previous long-term purchase commitments. We just talked about this. $10 billion to Taiwan Semiconductor that they made during a time of severe component shortages and our current expectation of ongoing macroeconomic uncertainty. So they were trying to plan ahead, trying to save money, trying to make sure that they had the supplies they needed, and they paid a price for that. So they paid up and stockpiled inventory. At the same time, demand crumbled. So you've got a problem with supply and demand here, and this is going to be a significant hit. Colette also said, we believe our long-term gross margin profile is intact. So they're not worried about the long term. We have slowed operating expense growth, balancing investments for long-term growth while maintaining near-term profitability. We plan to continue stock buybacks as we foresee strong cash generation and future growth. Now, as an investor, I want to see this confidence in leadership, and this is exactly what they're giving us. What about Jensen Huang? What's the CEO have to say? We talked about this already, gaming product sell-through. He also says this, quote, Nvidia has excellent products and position driving large and growing markets. As we navigate these challenges, we remain focused on the once-in-a-generation opportunity to reinvent computing for the era of AI, artificial intelligence. All right, bulls. So if you're focused on the long term, what are some positives you can take away from this? If you're a trader, this might not be as relevant to you. From a bull case, long-term investor, the 4 Series GPU is launching soon, probably this fall. Also, the high-end consumer remains strong, at least for now, but we've seen still a dip in gaming. Data center is a big positive. Companies' taxes are expected to be near zero. Now, that could change with some recent legislation, but as of now, automotive did beat by 41.9%. It's a small part of their business, but a huge growth opportunity for automotive, especially when you think of the amount of EVs and autonomous vehicles we're going to have over the next decade. And not even just autonomous vehicles or electric vehicles, even regular cars right now that are just ICE vehicles, they require tons of semiconductor equipment in order for them to operate properly. It's basically a computer on wheels nowadays, right? And then lastly, this is the thing that I really focus on, especially being a software as a service SaaS guy. Data center is still strong. It's 50% of their preliminary revenue and up 61% year over year. Now, of course, Nvidia's competition for data center is going to be mostly AMD and Intel. AMD acquired Xilinx, which we talked about. It's part of the reason I'm so bullish on AMD, because they're diversifying away from just gaming, like Nvidia has already done. Now, I also like Marvell technology in this space, but it's a little bit different player. And then, of course, we got Intel. It's kind of the wild card. It's been a strong player for years, but it's really fallen off in the last couple of years. And we saw in their last report, their last earnings, they're kind of getting their butts kicked right now by AMD and by Nvidia, especially when you think of the data center. So CHIPS Act, $52 billion. Just got announced by Biden. How is that going to impact, semiconductors? Of course, most of that's going to be semiconductor manufacturing. And you think of Nvidia and you think of AMD, these are fabless. So what they do, fabless semiconductor companies, they create designs. They have really smart people. They create designs. They take those designs of somebody else to build them, to manufacture them, like Taiwan Semiconductor. Intel is trying to build a foundry in Ohio, and those type of companies are going to benefit the most. With that said, I think all semiconductors, especially in the US, can benefit from it. And it could have some pull through when you think of stocks in general. A lot of times they trade in a basket. When you think of the semiconductor ETFs, a lot of them kind of trade together, So if a handful of them get bullish, it might have some pull through for some other stocks, including the fabless stocks like Nvidia and AMD. Here it is, hot off the press. Biden signs China competition bill to boost US chip makers. Includes more than $52 billion for US companies producing semiconductors, as well as billions in tax credits to encourage investment in chip manufacturing. The White House said multiple companies spurred by the CHIPS bill have announced more than $44 billion in new semiconductor manufacturing investments. The bill, dubbed the CHIPS and Science Act, includes more than $52 billion. A newly announced partnership between Qualcomm and Global Foundries includes $4.2 billion. So advocates say that the funding is needed to really give us that edge back for America. I mean, the thing is, guys, is that this really comes down to semiconductors, the new oil. You know, China wants to control Taiwan. What if they just come out and say, hey, we're going to take over Taiwan Semiconductor and you can't produce chips for American companies anymore? We're pretty much screwed because, you know, from Apple to Nvidia to AMD, all the big chips, they're mostly made, especially when you look at the new technologies. I mean, with those smaller nanometers, those are all pretty much done by Taiwan Semiconductor. They really have a monopoly on it. That stock would be worth a lot more if it weren't for the whole China-US tensions. But this really comes down to trying to make sure that we are independent. It's kind of like when you think of oil. You think of oil like we want to be independent so we don't have to rely. You think of like Germany and some of these European nations that are reliant on Russian oil. You know, we don't want that to happen. So this is really what it comes down to. It's a political game really to give the US an edge and to make sure that we're self-reliant when you think of semiconductors, because leaders are realizing how important semiconductors are, that it really is the new oil. Everything runs on semiconductors, from this microphone to this, you know, the cell phone, this iPhone, the TV, the camera that I'm talking to you on. Everything pretty much needs semiconductors. You know, new vehicles, you know, some of them have hundreds of semiconductors in one car, right? Let's take a quick look at valuation. Now, the stock market's selling off today. The Nasdaq's down like 1.3%. Nvidia, you can see, is down 3.7% to 171. P ratio, it's not cheap, 47.75. Short interest, 1.5%. And it's a mega cap, $444 billion. All right, final verdict. Is Nvidia stock a buy now? Of course, guys, you know I'm a bull of Nvidia. When you think about what's going on here with the cyclicality, with the market conditions, with macroeconomic conditions going on, supply chain issues, all this makes sense. In fact, Gustavo from our group in our Discord community, if you want to join Discord, check out Patreon, there's a link below. But Gustavo was telling us 2 quarters ago, he's a crypto miner. He was telling us, hey, this is coming down the pipeline. This is going to be an issue for these reasons. Watch out for Nvidia. We're going to look at a chart here, and I'm going to show you where I thought it was a buy. If you bought those levels, you're still up significantly. Is Nvidia stock a buy now or not? So long-term DCA, I think this is going to be a great opportunity. They're in every secular growth trend imaginable. When you think of AI, you think of metaverse, think of data center, cloud, autonomous vehicles, EVs, you know, on and on and on, cryptocurrency. They're involved in everything, AR, VR. Everything is powered by semiconductors. They're the new oil. Nvidia is well positioned for the future with artificial intelligence. I think these guys are going to do fine. It's still an expensive stock, but let's look at a chart and I'll give you my final take. All right, next we're going to look at a chart and I'm going to tell you if I think Nvidia stock is a buy now or not. Now, before I do that, I need to announce this video was sponsored by the Motley Fool. If you'd like to see the 10 best stocks to buy now, visit fool.com/ I always get that wrong, / Fired Up Wealth. And if this video was helpful, please like, please comment, please subscribe, please share. I appreciate your support very much. Okay, anytime you see orange, that's previous chart day. So previous chart days, we said, you know, $152 to $155 is kind of where it bounced. If pressure continues, you might see new lows. Well, we did see new lows. We got to $140.55. This is back here end of June, right before 4th of July. Since then, the stock ripped pretty hard. It got all the way up to $191 and found resistance. It's trading right now at $171. Now, the support level right now is $160.70. If that holds, you could see it run to $200 plus. 200 would get you past this moving average, and then the R3 up here is about 209. So you're going to see some heavy resistance again, probably at 200. And again, around $210. But that first support line you're going to look at, guys, is $160.70. In the CHIPS Act, you think that it would be bullish, but things kind of run up to it and sell the news. We have CPI data tomorrow, so it's going to be hard to know. CPI data can make the stock pop or drop either direction. I think if it gets down, if it gets to $160 or less, ideally, I like to buy this $150 or less. But you're going to dollar cost average. This stock could come lower, guys. It really could. But remember, guys, this is a favorite. Especially when you think of retail investors, long term, I think this is a great opportunity. But you need to hear that the stock is not cheap and the stock could always go lower. Here are the numbers to watch. Now, I want to invite you guys to watch a video that I did recently on Lucid. I've got a card over here, an end screen over here. Go check that out. It has over 35,000 views. And if you haven't seen it yet, I think it's a great one. I also did a video yesterday on Palantir. If you're interested in Palantir, we've got tons of other good videos. Subscribe, check out the channel, check out the playlist. There's tons of new videos. I appreciate your time and attention. Have a great rest of your day. Take care.